please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Deepan, good morning. It's been a great year for portfolio investors, for stock pickers. Your sense of 2018, do you think there are some warning signs, or do you think this bottom-up stock picking will continue to make money?
No, I think there are warning signs for 2018. When the market rallies the way it has in one particular year, and to do another repeat for the next year appears to be extremely difficult. And we are almost 3 years into this bull market, and a lot of the undiscovered gems have been discovered. Usually we have seen during bull markets, analysts, stock pickers go into overdrive. And now even small mid-cap stocks, which were unheard of, have been discovered. Their stories are known. Managements are coming on media and explaining what their performance and progress is likely to be. So I think by and large it's going to be very difficult for stock pickers in 2018 unless we see a major correction and valuations come to slightly sensible levels and there's some amount of margin of safety.
Okay, well, we did get that note of caution even from the mutual fund cafe that we did on Friday with 4 mutual fund managers. Everyone a little wary about the pace at which markets have run up. But Deepan, good morning. If you do still have to look for value, where would they be? Would they be in large caps? And which areas in the Nifty?
See, as an investment process, we are still very focused on secular growth stories. They could be in the banking sector, they could be in the financial services space, consumer-oriented stocks. And although these stocks are expensive, I think incremental capital is going into these companies in the hope that even if there's a correction, eventually, and there's over a period of time, the earnings growth would perhaps justify the valuation at which these stocks are trading at. So I think rather than focusing on the size of the business, it's better to focus on the nature of the business. Like Maruti is a large cap stock, but a secular growth story. Same is the case with HDFC Bank as well as IndusInd Bank. At the same time, we have large cap companies like say TCS, Infosys, where stagnation is still there in the performance, and those could be avoided. And the same is the case for pharmaceutical companies. So it's not the size that is important, it's the kind of nature of growth that is important. Consistency, visibility of earnings are of prime importance because of the way the valuations are at this point of time. In order to justify high valuations, we need that visibility, we need good corporate governance, we need the secular growth momentum.
Okay, that's interesting. Deepan, good morning. The 2 large cap stocks that have doubled this year in the NBFC space are Bajaj Finance and Indiabulls Housing Finance. Valuations are stretched here as well, but do you see enough visibility in earnings to support the valuations further?
Yeah, absolutely, I think. And Bajaj Finance disclosure that we and our clients are invested in that stock. And although valuations are on the high side and you may not get the kind of multi-bagger returns which these companies have delivered over the past 3-4 years or so, but I think consistent returns of say 15% or thereabout can still be factored in. And both these companies have a slightly differentiated business model, which is why they're able to do better than the competition. In the case of Bajaj Finance, I think the way they are growing their consumer finance business at the same time managing their NPAs is quite admirable, which is why I think it is perhaps the best pick in the NBFC space.
Okay. Deepan, we are entering into the last 14-15 months of this government, the NDA government. There is a budget on the anvil. Would you bet, farmer-oriented stocks since, there is distress as well in the farm?
See, since I've entered this market 20 years ago, I've been hearing about this farmer-oriented stocks and the government for the last decades or so, the government has been trying to boost the farm sector, and really, if you look back, fertilizer stocks have been big disappointments. Irrigation companies, like Jain Irrigation have been big disappointment. And from time to time, we have these insecticide, pesticide companies which do well, but then, there's a great deal of volatility in their earnings. So that's not a particular investment theme I'd like to focus on. If you're bullish on the rural sector, then go with the companies which sell over there, like say a Maruti or a Hero MotoCorp or some of the other companies in the FMCG space, which are trying to grow the rural business. I think that's a better way to play the entire, the rural theme going forward. But even that, I think it's, it's not entirely a rural-centric approach, because these companies operate also in the urban markets where also the variables come into play. So rather than focusing on specific rural stories, I think overall consumption growth in the country is going to pick up. It's going to go to elevated levels, and companies benefit from that. Especially companies benefit from GST level playing field between organized and unorganized. Could be better picks than a company which is operating purely in the farm sector.
Okay, Deepan, stay on. We have Chandan Taparia also joining us from Motilal Oswal Securities. Chandan, good morning. What stocks are you trading?
Yeah, very good morning. Our market hit the new lifetime high on the last trading session at 10,501, and expecting this positive momentum to continue as we have seen decline in the volatility, and fresh put writing is visible at all the immediate strike. So selected to be in selective heavyweights counter. First trade is buy on TCS. We have seen buying interest in entire CNX IT index, and TCS has recently taken support at its rising support trend line on the weekly chart. We have seen fresh put writing at 2600 strike, and it has surpassed its 50-day exponential moving average. So positive momentum could be seen towards 2735. One can buy with a stop loss of 2600. Second trade is buy on BEL. The stock has seen a strong closing on the week-on-week basis. It has given the highest weekly close ever. It is holding the gains, formed a positive candle. Longs are in tech, expecting further short covering towards 199.200. So one can buy with a stop loss of 183 for an upside move of 4 to 5% from current level. Last trade is Shriram Transport Finance. We are positive on the Bajaj Finance and the Shriram Transport Finance. Shriram is the strongest counter in the entire finance companies, making higher top, higher bottom, trading at lifetime high. Longs are in tech, expecting positive rollover to happen in the next series as well. So one can buy with a stop loss of 1427, and the stock has potential to head towards 1540, 1545 kind of levels.
Okay, Chandan, thanks a lot for those trading ideas. In fact, Deepan, that actually was going to be my next question. You have been bearish on IT. Do you think this rally that we are seeing, and it's been a decent rally on large cap IT, is a selling opportunity?
Yeah, absolutely. I think I've been consistently maintaining that IT has the best years of IT are behind them, and getting the double-digit growth rate will be extremely difficult for most companies. If you still want to invest in IT, I think some of the select mid-cap IT stocks may still do well for brief periods of time when they have a large project going on stream, or a large customer rolling out services for them. But by and large, I think the best years of IT are behind them, and there's disruption which is taking place in the industry, which is not benefiting Indian IT companies. I think the shift towards platforms, towards cloud, towards digital has kind of changed the entire complexion of the IT industry. So I would still not be positive on IT stocks. No doubt on valuation wise they appear to be cheap, but I would say that's a value trap, and you could buy into an IT company and be saddled with low growth, low returns for many years. So I would say best to avoid. We have a major bull market in place. It's best to go for growth stocks where at least we are assured of earnings growth in excess of say 15-20% or so.
Okay, Deepan, let me go from IT to the other sector that has had a roaring 2017, steel stocks, and for that matter metals. Not only Tata Steel and the other metal stocks like Hindalco and Vedanta, even if you looked in the mid-cap space, Prakash Industries, even a JSPL, have all done exceptionally well. Will you keep the faith?
See, I think steel stocks are very difficult to call, and considering that they've rallied as much as they have, from this point on, it makes a very difficult investment argument, because steel prices can go southwards as well. No doubt, I think what has happened in China and the synchronous growth which we have seen globally is benefiting all commodity prices. But then these are volatile businesses and volatile commodities, and from valuation perspective, from their historic growth rates, also in terms of how much shareholder value they've created in the past several decades or so, one wouldn't want to be in the metal stocks for a long period of time. But there's a nice trading bounce taking place in metals, in the other commodity stocks, and investors who already invested in these stocks, it's an easy decision to remain invested. You could see perhaps 15-20% appreciation from these levels in 2018 as well. But from a fresh investment point of view, I'm not that convinced. Again, as I said, I think margin of safety is not there, and if something were to happen to steel prices, you wouldn't even get an exit opportunity in these companies. So that's the kind of view we have on metals at this point.
Okay, so then Deepan, I mean, you just told us that you've been in this market for what, over 2 decades now. You've seen 20 new years. what is your New Year resolution as an investor? What have you learned, the good and the bad lessons from the previous year, and what would you take forth?
I think resisting the temptation is the big lesson that you have to learn. You know, every day there are new stocks hitting 52 weeks high, new exciting stories which come up, and unknown companies are being discovered, and a lot of the it's very easy to let your guard down and lower the standards that you have in terms of your stock picking, and that could be a huge mistake. I think I've paid that price in the past. So I think the one piece of advice or one piece of learning which I have acquired over the decades or so is to try and keep the quality of the portfolio pristine, which means that no compromising on corporate governance, no compromising on the quality of the balance sheet, no compromising on the kind of growth rates and the type of growth which the companies are able to generate. And I think if you keep those standards, then it will hold you in good stead in good times, or the bullish times as well as bearish times. And when the correction does come, because at some point of time you will have a 10-15% type of a correction, you'll be able to sleep much better and be able to ride that volatility far better if you have a good quality portfolio. So I think that's the most important message which I would like to give investors for the new year.